Before we start, I need to be completely transparent with you. I've been dealing with a brutal cold all weekend, and my head is absolutely pounding right now. So if my voice sounds a bit rough, I apologize. But here's the thing, I dragged myself here to record this today because I saw the latest Bank of America report this morning, and I realized we couldn't wait another day to talk about this. Silver just hit $58.19 per ounce as of this morning, Monday, December 8th, 2025. That's an incredible 102% gain this year. It's nearly doubled. But the price isn't even the real story. The real story is the shockwave that's coming in 2026. We spent all of 2025 worried about the supply deficit. But according to the new data, 2026 is the year industrial demand finally breaks the system. In the next 18 minutes, I'm going to show you the numbers that prove we're entering an industrial supercycle. I'm going to show you why artificial intelligence is now the single biggest threat to global silver inventories. And I'm going to explain why Bank of America just raised their target to $65 per ounce. If you thought 2025 was intense, you have no idea what's coming. Let's get into it. Let's start with the Bank of America bombshell. Bank of America just officially updated their 2026 forecast. They're now calling for silver to hit $65 per ounce, with an average price of $56.25 throughout the year. Why? They're not citing speculation. They're not talking about meme stocks or retail frenzy. They're citing a structural deficit. Their analysts explicitly stated that supply tightness has reduced the London market to a state of seizure. Think about that phrase, state of seizure. It means the metal isn't moving. The liquidity is gone, the vaults are empty. And this isn't just Bank of America. Wisdom Tree is calling for $56. UBS lifted their mid-2026 target to $55. Multiple major institutions are all pointing in the same direction. Higher prices are coming. But here's what's really interesting. The consensus base case for 2026 is higher prices. But the bull case, the shockwave scenario, is what you really need to pay attention to. Because that's where industrial demand becomes the story. To understand the shockwave, you have to understand the hole we're already in. 2025 marks the fifth consecutive year of a global silver supply deficit. Let me say that again. 5 straight years where global demand exceeded supply. The math is brutal. Since 2021, the cumulative deficit has reached 820 million ounces. That's nearly equivalent to an entire year of global mining production. We've effectively borrowed a full year's worth of silver from the future just to keep the lights on today. Metals Focus projects another 95 million ounce deficit for 2025. The vaults in London and New York have been drained to cover this gap. And now the cupboard is bare. We're walking into 2026 with zero buffer, no safety net, no emergency reserves. And exactly at this moment, demand is about to explode. This isn't a temporary imbalance. This is structural. It's baked into the market fundamentals, and it's getting worse, not better. Let's talk about the first engine of the shockwave, solar power. For years, analysts told us that solar manufacturers would thrift silver. They said manufacturers would find substitutes. They said they'd use copper. They said they'd use less metal per panel. They were completely wrong. Solar demand is on track to consume over 200 million ounces by 2026. That's nearly 20% of all the silver mined on Earth going into just one industry. One single sector is eating up a fifth of global production. Why? Because of efficiency. The new generation of solar panels, TOPCon and HJT cells, require more silver, not less, to get the energy density needed to hit net zero carbon targets. Manufacturers have to use silver paste. There is no substitute that works at industrial scale. Global photovoltaic installations are projected to surpass 500 gigawatts annually. Every single one of those gigawatts is built on a backbone of silver, and this isn't slowing down, it's accelerating. China ramped up solar capacity by 45% in 2024. The US infrastructure bill is pouring billions into renewable energy. Europe has aggressive green energy mandates. India is building massive solar farms. Solar isn't going away. It's the fastest growing energy sector on the planet, and it runs on silver. But solar is the old story. The new story, the one nobody is pricing in yet, is artificial intelligence. We didn't account for this 3 years ago. AI servers are energy vampires. They run hotter, faster, and more intensely than anything we've built before. And to handle that power load, they need silver. Recent industry reports indicate that AI server infrastructure requires 2 to 3 times more silver than traditional data centers. You need it for high-speed connectors, you need it for power distribution units, you need it for thermal management systems. Silver is the most conductive metal in the universe. You cannot build the AI future with copper. It doesn't work. The conductivity isn't there. And this is what I call inelastic demand. Microsoft, Google, Amazon, Meta. They're all in an arms race to build AI infrastructure. They will pay any price to get the chips, the servers, the data centers they need. If silver goes to $100 per ounce, it adds maybe $50 to the cost of a $50,000 AI server. They don't care. That's a rounding error. They will buy it all. This is the industrial shockwave. Two massive industries, green energy and artificial intelligence, fighting over the same shrinking pile of metal, and neither one can back down. So if demand is exploding, why don't we just mine more silver? Simple answer. We can't. Silver supply is flatlining. Global mine production for 2025 is estimated at 813 million ounces. That's virtually unchanged from last year. We're not growing supply. We're stuck. Why? Because we're fighting against geology. Ore grades have collapsed over the past 2 decades. We're moving twice the dirt to get the same amount of metal. Mines are getting deeper, more expensive, and less productive. And here's the kicker. 70% of silver comes as a byproduct of base metal mining. If we don't mine more zinc, lead, or copper, we don't get more silver. It's that simple. It takes 10 years to bring a new mine online. From discovery to production, you're looking at a decade. We cannot fix the supply cliff in 2026. The metal simply isn't there. Even if silver prices double, it won't magically create new mines overnight. The geology doesn't work that way. The infrastructure doesn't exist. The timelines are too long. Now let's talk about what happens when you combine these forces. You have a 5-year cumulative deficit of 820 million ounces. You have the solar industry consuming 20% of supply. You have AI servers demanding 2 to 3 times more silver than traditional data centers. And you have mine production that's flat. The only way this resolves is through price. The price has to rise high enough to destroy demand. It has to go so high that someone somewhere stops buying. But who's going to stop? Will Apple stop making iPhones? Will Tesla stop making electric vehicles? Will the US military stop making missiles? Will Microsoft stop building AI data centers? No. None of them will stop. These are mission-critical applications. They will pay whatever it takes. The only person who stops buying is the retail investor who looks at $60 silver and thinks it's too expensive. That's the demand that gets destroyed. Not industrial, not technology, just retail speculation. This is the shockwave scenario. Industrial demand becomes so overwhelming that price has to rise dramatically to rebalance the market. And Bank of America's $65 target, that might just be the beginning. Let's talk about what analysts are predicting for 2026. Bank of America says $65 peak with a $56 average. Larry Lepard from Equity Management Associates sees $75 by mid-2026 and $80 to $90 by year-end. Some independent analysts are calling for $100. But here's what's really interesting. At the start of 2025, the average analyst forecast was $32. Silver completely destroyed that target. It doubled it. This tells us two things. First, analysts consistently underestimate silver's upside potential. Second, when silver moves, it moves violently and exceeds expectations. So when major institutions like Bank of America call for $65 and fund managers like Larry Lepard call for 80 to 90, they're not being reckless. They're being realistic based on market dynamics that most people are still underestimating. The industrial demand story is just starting to get priced in, and when it fully hits, prices could go much higher than anyone expects. Let me show you the technical setup as well. Fibonacci extensions from silver's rally earlier this year suggest key targets at $72 and $88. These aren't random numbers. They're mathematically derived levels where price tends to pause or accelerate based on historical patterns. The 100% Fibonacci extension lands at $72. The 161.8% extension hits $88. Both of these levels align remarkably well with fundamental analyst predictions. The chart is setting up for continuation. Silver recently pulled back slightly and is consolidating near current levels. That's not a reversal. That's a healthy pause. It's building energy for the next leg up. When you combine technical analysis with fundamental supply-demand dynamics, everything points to significantly higher prices in 2026. Now I need to be balanced here. Not everyone is this bullish. Citi recently lowered their 3-month target, citing shifts in momentum and potential near-term pullbacks. Some conservative forecasts, like HSBC's, hover around $40 to $43 for 2026. They're cautious about near-term timing. And yes, there are risks. If global economic conditions deteriorate rapidly, industrial demand could weaken. If a major recession hits, solar installations could slow down. These are legitimate concerns, but here's the key. Even the bears aren't denying the long-term bullish setup. They're just cautious about timing. The structural fundamentals for much higher silver prices are undeniable. The supply deficit is real, industrial demand is real. AI infrastructure build-out is real. The question isn't if silver goes higher. The question is how fast and how high. So what does this mean for you as an investor? If silver hits $65 by the end of 2026, that's a 12% gain from today's $58 price. If it hits Larry Lepard's target of $80 to $90, that's a 38 to 55% return. But here's the thing. You can't time the exact entry. If you wait for a pullback that never comes, you miss the rally. If you go all in and silver corrects 15%, you panic. The smart play is systematic accumulation. Use dollar cost averaging. Set limit orders at key support levels, like $54 and $50. Build your position over time instead of trying to nail the perfect entry. And remember, silver mining stocks typically move 2 to 3 times the price of silver during bull markets. If silver goes to $100, many miners could double or triple from current levels. That's leverage worth considering if you have the risk tolerance. Let me wrap this up with one key thought. We're not in a normal commodity cycle. We're witnessing the convergence of two megatrends: the green energy transition and the artificial intelligence revolution. Both are silver intensive. Both are accelerating. Both are non-negotiable for governments and corporations. When you combine that with a 5-year supply deficit totaling 820 million ounces, you get a market that's structurally tight. Add in flat mine production and 10-year development timelines, and you get a supply response that can't possibly keep up. The industrial shockwave is here. The supercycle has begun. And $65 silver is just the first target. Bank of America wouldn't put their name on a $65 forecast if they didn't have conviction. These are institutional analysts with access to data and supply chain information that retail investors never see. I'm going to go rest now and try to shake this cold. But I wanted to make sure you heard this analysis today because the window is closing. Silver is trading at $58 as of this morning. It's already up over 100% this year. But the industrial demand story is just getting started. 2026 is when everything accelerates. Don't be the person who looks back in 12 months and says, I knew silver was going higher, but I thought 58 was too expensive. Don't be that person. The shockwave is coming. Make sure you're positioned. If this analysis opened your eyes to what's happening in the silver market, hit that like button and subscribe to Money Gallery. We're tracking this industrial supercycle every single week with data you won't find anywhere else. Drop a comment and tell me, do you think silver hits $65 by the end of 2026? Or are we heading even higher? I want to hear your take. Thanks for watching, and I'll see you in the next one.